Hey guys, Jeff Lipple. Just got done meeting with a good friend of mine today, and we were going over some of his investments, basically with his retirement accounts with stocks, bonds, mutual funds. And that's what I used to do for a living, and I was a licensed financial advisor and have taken master's level finance and investment courses. It's funny, the more that I learn about that, the more I realize that a lot of the information and options that are out there are a hindrance to most people when they're choosing their investments. A lot of the different mutual funds and investment options that are out there are really more of a marketing thing, and that's a whole other long conversation I could have with you. But you really want to just keep it simple and think about what is your game plan. What are you actually trying to accomplish, instead of getting overwhelmed by all the different options and what am I even investing in and how do these things work. You want to just keep the simple principles and realize that, especially with something like a retirement account, it's such a long-term play that you don't have to get caught up in what the best sector is or what the best industry is doing. You just want to keep it simple and realize that if you're trying to grow your money the most you can over a long extended period of time, like 30 years, for example, that putting your money into stocks where you have ownership in companies is really the best way to do that. And if you're trying to reduce your risk and have your money grow a little bit more slower but a little bit more steady, you can put it into bonds. And going into things like index funds, like an S&P 500 index fund, where you have a little bit of ownership in all the Fortune 500 companies, can accomplish that. You don't have to get so caught up on, should I invest my money into Microsoft or Google or into this fund or that fund. Really keeping it simple and keeping your money there for the long term is going to put you in the best position for the most part, generally speaking. A really good book that you could read or listen to about this is, I think it's just called The Little Book of Common Sense Investing or something like that, by John C. Bogle. He's the founder of Vanguard Investments. But as far as it relating to real estate, it's the same kind of thing. People get so caught up in, these days, it's awesome the amount of books, blogs, podcasts, crazy amount of information out there on real estate investing. Anything that you would need to know to become an investor is out there, which is great, but you also have to worry about the shiny object syndrome, where you hear something cool on a podcast and then you talk to an investor and they say they're doing this, and all of a sudden your mind's running in 20 different directions. Try to just keep it simple, especially in the beginning. Figure out what you're trying to accomplish with your real estate investments. Are you looking for some short-term plan where it is like a flip? You're going to be involved in that, with less than a year, maybe 3 months to 6 months, flipping this property, getting a big payout, $20,000, and it's going to be more time and labor intensive, but you're getting a big payday, and once that payday happens, you need to figure out the next thing to do? Or are you looking to build long-term wealth by purchasing a bunch of rental properties and only having a little bit of cash flow each month, but it's ongoing indefinitely? So try not to get overwhelmed by everything that's out there. Really keep it simple, especially in the beginning. And you can always reach out to me or anybody that you respect or that you know is doing well in the areas that you're interested in to look for some guidance. But put that game plan in place, figure out where you're going, and then you'll have a better idea of what is the best way to get there. All right, everybody, I'll talk to you soon. Thanks for listening, and I hope you're having a great day.